All right, so I just recorded this whole video. I worked out, and as I was working out, I realized there's something I didn't say at the beginning of this video that you're watching now. So here it is, I'm editing this in. Everything I'm about to talk about is under this notion that we're gonna get a crypto bull market. Altcoins are gonna move. They're gonna move. We just had the big, beautiful bill. It made it through the House, and money printers getting ready to come on. Interest rates coming down. We go into this boom phase. Economy blowing up, doing well. Assets, crypto assets going up. This whole video is with that in mind. Now keep in mind, maybe it doesn't happen. I always say, crypto, maybe it all goes to zero. We have to manage our risks. But what I'm about to talk about in this video is in relation to a crypto bull market. Altcoins are running. And the question is for all of us, are we prepared and do we have a plan? Because there's some competition out there. This is a very spontaneous video. This cycle is going to be like no other cycle we've ever seen. And we've already seen this, right? The way in which Bitcoin is operating, the lagging of altcoin season. There's so many different factors to talk about. It becomes kind of repetitive. But there is one thing I've not discussed, and it just occurred to me actually today. Like, I think I subconsciously realized this, but it just occurred to me right now. This cycle is like no other cycle in that it's not retail versus retail. That's hard enough. Many of you, and I've been there, have round-tripped really nice gains, right? I say often last cycle I did a way better job of taking profits, but I could have done better. And this cycle I'm very determined to do better. It's gonna be very data-driven. But put that aside, it's been retail versus retail. This is the first cycle where it is retail. It is you and I versus money managers, financial advisors. Think of, let's very simply use Ethereum ETFs as an example in this instance. We've been tracking just BlackRock, for example, constantly lately for over the last month, majority of the time, scooping up Ethereum, right? There's a lot that goes on in regards to that. There's a lot that goes on in regards to the ETF products, the Ethereum products, the altcoin products that are coming into play, the Grayscale one that just got approved and then now it's paused again, but a lot goes into that, the details of those products. The financial institutions that are involved here, there's a lot of different moving parts. But at the end of the day, what's happening on the other side? Everyday people buying, say, exposure with Ethereum ETF, and they're emailing, texting their financial advisor who's guiding them through that process. And we really have to think about that story, because what's happening there plays into our exit strategy. Because guess what? There's different intricacies. Let's say you have Joe Smith, financial advisor, working with Bob, and Bob's like, hey, I'm trying to get exposure to this Ethereum ETF, get me in. What's the financial advisor going to be doing, right? What's their approach? And I'm sure financial advisors are all gonna have different approaches, but I think for a lot of them, they're going to be probably kind of conservative, right? So they're used to way more toned down gains when it comes to like investments, right? So something like Ethereum, if it breaks out and is going crazy, a lot of you, for instance, might be like, man, I'm waiting for my altcoin to 10x, 20x. We might have these financial advisors that are like, man, very steady, cool, and collected when it comes to taking profits. Very conservative. And that could be the same when it comes to we're getting a parabolic run. What is a financial advisor who's used to traditional markets just seeing conservative gains and locking those gains in for clients and customers? What are they going to do when it comes to parabolic moves? They might have way more steady hands than a lot of retail. And the purpose of me doing this video, and there's so many different moving parts there, I would like to think more on it. This is very new in terms of what I'm saying. But like, we have to keep that in mind, because it's no longer just us in our own little crypto world. But now we have very big money in play, and we have institutions in play. And we have on the very zoomed in, just financial advisors in play, making moves, making recommendations, helping their retail clients make decisions based on locking in profits. So I'd be very careful with just sitting around waiting for your 10, 20x And I would be very focused this cycle on taking profits. I'd be very focused on coming up with some type of scaling out exit plan. And we have to keep in mind, maybe we have a very conservative, higher high, higher low growth this cycle, building strategies around that. Maybe we do have a parabolic move that comes out of nowhere again this cycle. Having a strategy in relation to how we take profits in that environment. But we have to take into account, I think, if that is happening and we're coming up with a plan, right? Whether it's you're selling at 100% gains, 300% gains, 400% gains, whatever your scale out plan looks like, you have to keep in mind, you're not the only one playing this game. And it's not some other retail guy that just got into crypto down the street either. There's big money in play right now. There's big money that's been accumulating something like Ethereum. And we're about to witness institutions getting into the game as well. So I just wanted to put these thoughts out there. It's something to very much keep in mind. You have to have an exit strategy. You have to plan. You have to figure it out. I can't tell you how many times during this little spiel I was going to, plug our intelligence system, but I refrained, but I'm going to do it now. This is exactly what we built the intelligence system for. So if you want to get access to our risk models, to our exit planners, start planning your exits based on risk, not just price speculation. And I really think this is where the advantage comes in, even when it comes to those financial advisors out there, right? Having this risk-based plan, data-driven plan, because I can tell you one thing, a lot of those financial advisors are not going to have access to our risk models in our system. So either way, our system or not, have a plan, have an exit strategy. It's not just you versus retail this time. It's you versus traditional markets, traditional finance, big money on that side of the playing field as well. So those are my thoughts. Let me know what you think. Hit the subscribe and like. I'll see you in the next video. God bless.